I've mentioned this before. I've talked about Deutsche Bank over the past year and how for years I've heard they're a bad trade or two away from really being in some trouble. And they did get downgraded by S&P last night.
The land of Arcadia.
Well, hello there, my friends. Chris Marcus here with you for Arcadia's weekly market wrap-up on Friday, June 1st, 2018. Wild week in the markets, a lot of things finally happening, so you're going to want to stay tuned. And before we get started, you see that little button right down there that says subscribe? Go ahead and click that. That way you can stay posted as these developments continue. So with that said, let's jump right in. Big news this morning. I've mentioned this before. I've talked about Deutsche Bank over the past year and how for years I've heard they're a bad trade or two away from really being in some trouble. And they did get downgraded by S&P last night. I would argue that or assert that probably is lower than a BBB plus rating. Yet why this is significant is that there is the potential that this could be a credit event for their derivatives book. Colossal mess in there, so I'm not sure anyone knows for sure, but certainly that's the feel I'm getting so far. And given that Deutsche Bank has a massive derivatives book that's highly interconnected, obviously not ideal news for Deutsche Bank. Stock continues to take a beating. Although it wasn't just the downgrade, there was a whole bunch of news this week. Here, Deutsche Bank U.S. operations designated to be in troubled condition by the Fed. Kind of ironic. The Fed giving advice on the credit conditions of banks, given the Fed status, yet there was a report that basically the Fed had put them on their troubled list about a year ago. And in this next article here, where something it's looking cheap, it's interesting to note that, again, a few things happening here. Let's see. The troubled condition status, one of the lowest designations employed by the Fed, as influence moves by the bank to reduce risk-taking. Good luck with that. And up here we see, after the reports, the Federal Reserve secretly downgraded the bank a year ago to troubled condition. Now, why they said that and kept it a secret is, well, easy to understand, although, you know, what's the point? If that's really what they feel, I don't know why the Fed wouldn't share that with everyone else. Of course, I know exactly why the Fed doesn't share that, or basically most of the things they do with everyone else, but either case, so you have the Fed even opening their eyes and noticing. And also, on Friday, Australia's consumer watchdog said prosecutors will bring criminal cartel charges against Deutsche Bank, Citigroup, and Australia and New Zealand Banking Group over its role in underwriting a share placement. It's not looking good, and as we'll cover in the next few articles here, you know, it's again interconnected. It's not just Deutsche Bank on an island by themselves, but all of the credit problems, all of the currency problems, all the debt problems are combining together. And certainly if Deutsche Bank continues to deteriorate, which personally I think they will, this very well could be, whether it is or not, but certainly has positioned itself to be the kind of spark that could trigger really the end of this currency system that I've been talking about and writing about for years. As we look over here, come on, there we go. Internet a little slow today, but we're just gonna roll with it. Italian yields spike on report. Italy ruling coalition seeks funds to quit the euro. Whether they will leave the euro, whether another country will leave the euro, I'm still always a little confused on how whether a country is in or out of the euro is often phrased as, again, the Armageddon. British left the euro last year, life carried on. Yet to the degree that you can start to get the feel that it's not ideal. Italy their government's a complete chaos. Bond market been getting hammered. And then we see here that after Italy, Spain risk soars, which isn't surprising. If you remember, I believe it was back around 2012, maybe into 2013, when Spain was in a lot of trouble with their debt loads. Again, none of these things have changed. It's really just a lot of printed money has been pumped into the system to buy a lot of these bonds, mask the problems. But again, nothing structurally has been done to resolve the underlying issues. So we have Italy, Spain. I'm sure we'll be hearing about Greece again soon. And whether they actually leave the euro or not, the euro is in the position where it has a lot of bad debt, and either the bonds go bad, which, again, who owns so many of the bonds? The banks, the governments, the central banks. Of course, the wild card is that the European Central Bank will print. If you remember Mario Draghi several years ago's famous quote, said they'll do whatever it takes. And I think he said something about a bazooka, basically saying he's ready to print, which I assume he'll do. Of course, that just further exacerbates the problem. And much like in the US, when you have printing just going to keep going on, that's why you see action in cryptocurrencies. That's why you see action in gold and silver. Here's Jim Rickards mentioning the threat of contagion is now more dangerous than ever. Certainly, I agree with that. Too big to fail banks are bigger than ever, have a larger percentage of total assets of the banking system, and have much larger derivatives books. All on point there. So it's going to be fascinating to see how the summer unfolds. A look here at the US 10-year. Again, about 2 weeks ago, had soared past 3%. And then when the Italian news happened this week, there was the typical flight to quality, which I would assert is highly misnamed, to flock into US assets that are probably far worse shape just when you look at it numerically and from a financial standpoint than the US. But again, worthwhile to consider is to be prepared for this, because as silly as calling US dollars and treasuries a safe haven may be, that doesn't mean that you're not still going to have periods like this where when things are happening in Europe or other portions of the world, that people won't still flock in. I expect that to change eventually, but just be prepared for that, because you're going to see, you got to remember, most of the bankers, most of the folks I worked with on Wall Street, most regular people aren't really seeing what's going on, so they're just going along with the mantra that the Fed or that the Treasuries and dollar are the safe haven assets, and that will happen until that changes. And when it changes, I imagine it will be in quite spectacular fashion. So I continue to avoid those assets. Another one, in case you needed a little more reason, here in this ongoing trade war with the largest creditor to the U.S., we find out the latest update. For its part, China is looking to line up other countries, especially in Europe and Asia, against the U.S., China officials say. Again, I don't know exactly who the Wall Street Journal was talking to and how accurate all of these reports are, but certainly fits in with the theme of what we've seen out of China and the actual actions they're taking. That would certainly imply that this could very well be possible. And certainly, again, with China holding all the treasuries, and as we'll get to in the next one, their petrol Yuan actually seems to be picking up some steam here. Again, you can see trading volumes, let's see, share of Yuan contracts in global trading jumped to 12% compared to 8% in March, and 14% of WTI volume up from 2% in April. So again, the petro Yuan was not perhaps something that was going to change the world overnight, yet interesting to see that it is being adopted, and China is, there's speculation, let's call it, that they're really pushing to increase and further have the system adopted, leaving the US behind which again, when China's the largest funder of US debt, you see what we're getting at here. So quick look on the cryptos, pretty much flat this week. And let's see if we can get CoinMarketCap to pull up here. Much like gold and silver, which we'll take a look at next if our internet loads. Crypto's kind of just sitting there, haven't really acted too much to the downgrade news yet. Again, a lot of these things are building. We have not seen the spark yet. Although from what I'm hearing, I think there will be some positive crypto price action in the month of June. We'll see how that develops. But in the end, you see that whether the price goes up or down in the next week or month, there you see Bitcoin around 7,400, Litecoin down at 118. But there's the short term, and then there's the developments in the long term that have led to the whole inception of the crypto market. And certainly when you think about all the things we just looked at and why people are going into cryptos, certainly every reason there to believe that we're going to see a massive rush of cash into the crypto sector as the legacy markets continue to degrade. And lastly, a quick look at the gold price, about 1,300 bucks. Silver still didn't do much this week. So, which on one hand, if you're looking to buy gold or silver or cryptos, is good news because the price hasn't gone up yet. But again, based on all the factors that we're seeing, certainly every indication that that will be happening. And it's been a long wait. And one note on that, mentioned in an interview I did with David Modell yesterday, which will be posted shortly. And great content. So check back for that one. And one of the things we talked about was how, yes, silver and gold have gotten pounded over the past 7 years. So that hasn't been a good time period, primarily due to the manipulation. Yet, for everyone who's out there trashing gold and silver, keep in mind gold was at about 250 bucks an ounce in 2001, went up to 1,900, now at 1,300. So even just forgetting the manipulation for a second, 250 bucks to 1,300, it's up fivefold over the last 20 years or so, which is probably ahead of just about any other market I can think of that's a better return than you got in the stock market or the bond market. So just factor that in when people say gold doesn't do anything. You have a lot of money printing that's being reflected. I expect that to accelerate. Whether it's this year or not, I can't say for sure, but geez, the signs sure point to it happening sooner than later. So we'll keep an eye on that and hit that thumbs up button there. Apparently I'm learning that helps spread what we're doing quite a bit. So I do appreciate you watching, and if you can hit the thumbs up button and help more people get access to this content, I do believe it's important stuff that can make quite a life-changing difference if you understand it. It certainly has been the case for me, and I hope to be able to offer that to you. So with that said, thank you as always for watching. Hope you're going out there and having a great weekend. It's beautiful here in Denver today. And with that said, I will see you next week.